Well, good afternoon, everybody. It's a pleasure to be here. This is the first time that CanCambria has presented at EnerCom. We're very excited to share the story of CanCambria with you all, and thank you for participating in our presentation this afternoon. Okay, so what we're going to talk about, we're going to cover a lot of territory, but principally unlocking a large wet gas asset in Central Europe. A really large strategic asset that we acquired in 2022, and we will step through who we are as a company, why we're in Europe, and we'll finish up by talking about the asset. But since we're a relatively new company to the market, I'll give you a brief overview of the corporation. Forward-looking statement, please read that. So we are a growth-orientated exploration and production company. A nice presentation earlier this morning about exploration, and really we are focused on adding new reserves to a country, to a region that really needs them. We entered Hungary, and you can see, just for reference, this is the location. We entered the country in late 2022. Our business model is low-cost entry, so we did that at a relatively minimal entry cost to pick up around 30,000 acres. We had a 5-year plan to establish a footprint, do all the feasibility, desktop studies, and ultimately to add production within that 5-year window, which is a pretty aggressive timeline for an exploration venture. It does speak to the utility of the ease of operations within Hungary as a jurisdiction, very supportive, allowing us to bring on this aggressive program. We plan to drill our first well next year and hopefully have production shortly thereafter, maybe Q2, Q3. As I mentioned, we listed the company in October of last year, so we've been trading a little less than a year. Pretty good stock performance thus far, but we're doing numerous events just like this to get the word out, get the story out. There is a lot of competition in the space for investors. We're on the Toronto Exchange, traded in the region of 50 to 75 cents. And I'll touch on a couple of key acquisitions that we did over the last 6 months that moved the stock, as you can see on the upper right-hand side. As you would anticipate, a company of our size, relatively new, we do not have any debt. We have a relatively clean share structure. No production or proved reserves, but we do have a significantly large resource base. An audited resource base of in excess of 500 billion cubic feet of gas, plus 50 million or so barrels of liquids. And that is presently our focus area to deliver value to the shareholders. We did pick up a large concession here recently that has a huge amount of running room, and I will show you that as we get through the presentation. We talk about valuation. This is a company-making type of asset in Hungary. We're talking about tight gas, unconventional. Once we pick the lock and we demonstrate commerciality here, there is a significant amount of low-risk running room inventory to drill, maybe 5, 10, 15 years of inventory. So who are we? The leadership team. We've done these types of projects numerous times in the past. We have a huge amount of unconventional experience, having drilled many thousands of vertical and horizontal wells. Now, my background, I'm a petroleum geologist. We are highly technical and focused on the details. My experience was largely with Pioneer Natural Resources in Dallas. I had 15 years there working Permian and Eagle Ford. And I often get the question, how does that relate to CanCambria? Well, a lot of what we did in the Eagle Ford in the early days, 2009, 2010, looks very similar to what we're trying to accomplish here in Hungary. An asset team structure, agile, nimble, data-driven, focused on execution. So there are some parallels, albeit we are significantly smaller and we have different goals. We have a presence in Hungary and Budapest. Pete Van Asch, our country manager, is there with a team on the ground supporting regulatory functions, and we have a significant amount of capital markets experience now on our board. So we have a team that has done this numerous times. My last role actually was at Ultra Petroleum here in Denver, and actually their giant Pinedale field where we drilled vertical and horizontal wells. That's quite analogous to a lot of what we are doing here or attempting to do in Hungary. And I left Ultra to join CanCambria in 2022 specifically for this project. So this is a roadmap for our presentation. Don't worry about all the text. We will cover all these bullet points on the next series of slides. The key takeaways are we have a sizable onshore asset in the heart of Europe, unconventional in nature. We own it 100%. Europe, as you probably well know, is probably the most attractive natural gas market for E&P companies anywhere in the world. Hungary itself, if you can get into Europe, Hungary itself is a very good place to operate. Quite a lot like North America in terms of getting things done. We permitted a 3D survey in just a matter of weeks. Very pro-industry, very supportive in all the endeavors that we're trying to accomplish. The resource base is large, and I'll show you those numbers. And we did here recently acquire a new exploration concession, a significantly large concession under a competitive bid process that really adds some running room and some scope, makes the asset strategic beyond just the one asset or the one project that we're currently looking to drill. So European natural gas prices, we could probably spend the entire rest of the presentation talking about macro scale, this, that, and the other in terms of gas. The key takeaway is you're looking at about a 250% premium for European gas versus North American gas. Now, the catalyst for that change, a lot of it was precipitated by Russia-Ukraine, of course, but we don't see really any significant drop from this $10 kind of base here in the out years, even with hopefully with a ceasefire, etc., in that part of the world. A lot of the fundamentals support higher gas prices in the next several years. A lot of large fields are on decline, limited capex investments in those infrastructure, and a really modest exploration success in Europe as a whole. The EU, all countries are on a significant decline. Really, the three non-EU countries, the UK and Ukraine, of course, have headwinds in terms of bringing production. The UK, very pro-decarbonisation, Ukraine devastated with the war. Really, the only success story is Norway, but most of that gas goes elsewhere. Hungary still gets quite a lot of gas from Russia through pipelines to the south, and the European Union, of course, is pressuring the government there to become a little bit more energy, not independent, but sustainable. So there's a push from the Hungarian ministry to grow production 20-25% over the next several years. So there's a lot of good reasons, why we want to be in this part of the world. The GDP in Hungary is also leading, gas consumption is also leading the EU. So what does the oil and gas landscape look like in country? Dominated really by MOL, as you can see on the histogram. MOL is a large integrated oil and gas company with operations both within Hungary and across the Central European region. The inset graph at the top shows base production decline, notably in gas. So where is that gas production in country going to come from to offset the decline? A surprisingly small number of operators. Aspect Energy, of course, in Denver, Vermilion, Canadian company. MVM is the large utility company. And if I add in here CanCambria's resource numbers, we stack up fairly well. We can be, given some success here, a strategic player within the country. Probably the most important part of the story here is this NRI. We get to keep 98% of the product that we produce. And that is fundamentally due to this unconventional push in country. Most of the remaining resources in Hungary are deep, tight gas type of assets. So in order to facilitate more investment in country, the ministry, the government has incentivized companies like ours to do that. So I don't know of any other projects anywhere in the world where the company gets to keep 98% of the product that it produces. Taxes also low in the jurisdiction. So these together make the project fly. The economics are stellar, given these fundamentals. Just one note on infrastructure. Our focus area, this is the ownership in green and blue that we have here. The yellow are gas pipelines within the country. There's internal and also export lines. So we have a fair amount of infrastructure when we get the wells drilled and bring on production. There's a gas storage facility very close by. So good infrastructure, good takeaway capacity, and also excellent services, rig contractors, etc. within the region. So good infrastructure and good services. So with that introduction, I'll talk a little more about the asset that we have. And this is the asset that we currently own. The grey outline comprises two main areas. The cross-hatched area is the area we picked up in 2022. This is around 30,000 acres. This is the area that has all of our resource and our current drilling plans in this general region. It is within this Miocene age Kiskunhalas trough. We recognized fairly early on, we acquired new 3D, we recognized fairly early on that the basin and the resource extended across this hard line. So recently we picked up this much larger concession area, a competitive bid process. We were the successful winner of that process. We outbid a couple of other companies. We picked up almost a 250,000 acres, and we did that at less than $10 an acre, so a very good low entry cost consistent with our business model. And for reference, this area is two and a half times larger than Denver County. It's a really, really large area. The graph on the upper right-hand side here shows the well count by decade. And the fairly obvious takeaway here is once Hungary was an independent republic, or is an independent republic, a lot of investment in this area really dried up. There just aren't really any wells in this area drilled over the last several decades. And that's not because the geology is poor. This is a proven basin. There are a whole host of oil and gas fields on these structural highs that you can see that correspond to this level activity. So we consider this area to have a huge amount of upside and a lot of low-hanging fruit. Imagine going into a basin, a proven petroleum basin, where nobody's drilled the last 30 years. All the technology, all the best practices, all the knowledge that we have, especially from conventionals, come into play in this general area. Now that being said, we are still focusing all of our effort presently on getting the first 2 to 3 wells drilled in this general area. Just to give you a sense of the other exploration concessions that were put out at about the same time, MOL picked up 4 concessions here. They did that, 2 of which in a joint venture with Turkish Petroleum. We are, of course, in the south. We're about 2 hours south of Budapest. Aspect Energy has a concession here. And then there's actually a concession immediately to the north, and we're already seeing seismic being permitted in this general area. So a lot of activity. Very hard to get into Hungary. If you wanted to just come in, this concession process took about 3 years to come through to kind of maturation. So if you make a decision to get into Central Europe, the only way in really is to acquire your way in, because these exploration concessions don't come around all the time. Okay, so we'll go a little bit deeper into the data that were collected in this area. Again, now we're focused on our 30,000 acre block. This is the top reservoir within the main Miocene age basin. A little bit shallower to the northeast, deepening into this general area. There were 3 wells drilled within this basin, 2 in the late 80s and 1 a little bit more recently. All those wells demonstrated pay in the Miocene age section. It's around 1,000 meters of gas-saturated, overpressured rock. So we have numerous stacked tight gas sands. We plan to drill this and exploit this with vertical wells and multi-stage fracs. There is a huge amount of potential in the adjacent constellation area for maybe horizontal wells, etc. But for right now, we're focused on the vertical drilling. Our new wells are positioned in the sweet spots we identified from our 3D. One of the lessons learned from looking at the wells that were drilled, the legacy wells, is the reservoir was somewhat discontinuous. In fact, the well that was drilled in 2008 here, it flowed gas to sales for around 6 months, but it had a slightly lower net pay thickness, and it was completed in just 2 stages. So we recognized that when we came in here, a better view of the subsurface was absolutely fundamental to position our wells. And so that's what we did. When we were private, we spent $4 million to fund a proprietary 3D survey. This technology, relatively new, wireless nodes, full azimuth type of technology. This was not really technology that was available 10 years ago. Certainly we couldn't have afforded it 7 or 8 years ago. So both the technology and the affordability has really benefited CanCambria. Just an image on the upper right of the data that was available before we entered the play, and our new data really targeting this whole thick section of overpressured gas in here. And hopefully you can see a lot more fidelity, a lot more information in this deep section that allows us to figure out where we should drill. The image on the lower right-hand side is the main map that we use to leverage the distribution of the resource in place and to position our new drill locations. So the chart on the upper left shows the resource numbers. These are independently audited numbers. To the right-hand side here, really this is the number that we care about. This is the risk recoverable number. This 500 or so BCF corresponds to around 4,000 acres. So maybe in the past you may have had resource companies come in and tell you that the entire surface of the earth is smeared with oil and gas. That's certainly not the case here. We are very targeted and specific and focused on the area that we want to develop with these vertical wells. So we start out, of course, within the entire basin with a much larger number, 1.9 TCF. After our 3D, my investors, my board asked me how much larger did the accumulation get after we acquired the 3D, and I told them it didn't get any larger, it just got a lot more confident, and it did get to be investment grade. So we didn't make the resource bigger, we just focused in on a much more highly confident area to go drill those initial wells. So we go from the 2 TCF to 1.1, technically recoverable, just a little over 600 BCF, and then here, this is the number that we care about. That corresponds to an MPV of 1.1 billion. The 4,000 acres typically would be drilled at 40-acre spacing, so that might support 100 wells. For this particular case, we used a fairly conservative 50-well approach, and that is fairly typical of tight gas type of systems, where you have 2 or 3 initial wells to demonstrate commerciality, and then follow on low-risk drilling inventory. And we've done this in many, many basins right the way across the world. So how do we operationalize this? The wells are not cheap. Having come from the US and leaning into Europe, these are in the region of 18 million US to drill. Vertical wells down to 4,000 meters. We plan to drill 3 wells kicking off next year, and we plan to drill them with hopefully a joint venture partner. We are in the midst of a data room at the present time, so I can't really say too much about that, but the asset is clearly large enough to support a partner, so we would look to farm out at the asset level and underwrite pretty much all of the 56 million that we need to spend on these first 3 wells. As I said, infrastructure is pretty much in place, so these first 3 wells we can flow to sales and we can monetize fairly quickly. Importantly, on the right-hand side here, regulatory approval has been obtained. We have the permits for the first 2 wells. The only reason we don't have a permit for the 3rd well is that it only takes about a month to get permits, so we wanted to wait and integrate learnings from wells 1 and 2 to pick the location of well 3, 4, and 5. So very good. The operating plan has already approved hydraulic stimulation for these vertical wells. Surface damages, we acquired the 3D with not a single dollar of surface damages, so a very, very good area to operate. This is kind of typical low quality agricultural land, very easy to get in, very easy to get out. And so what does a typical well looks like? The shape of the decline here, classic tight gas. We base the decline shape on those Pinedale wells that I referenced earlier up in Wyoming. There are no good analog wells or fields for this tight gas system in country, which is unfortunate, but you know, geology and Mother Nature doesn't really care where it's at. The reservoir is quite analogous, stacked discontinuous sands. So high pressure, so we have this high rate, steep initial decline, 3-component hyperbolic, around 1.1 on the hyperbolic, and these wells, as a function of that, pay out anywhere between 12 to 18 months is the model that we have. 2026, drilling our first 3 wells. Cash flow model shown here, self-funding within really 3 to 4 years. What we hope to do, this is the ramp, this is the drilling of 5 to 6 wells per year over the first decade, 50-well program, and then the natural decline of the field. You know, we hope to return money to shareholders and also help fund maybe some exploration wells within our concession area from this free cash flow. 2027, this is the model that we burdened with a pipeline. The takeaway capacity, the tie-in to the small gas storage facility is really for the first 3 to 5 wells. There will be some capex needed to go build out about a 30-mile tie-in to those trunk lines. But really a very attractive project once we commercialize. And so with that, I'll just summarize. You know, we have a team that is technically very mindful of, you know, where we should focus our attention, what are the key data sets that we need to get, execution orientated. Strategic location, we still own 100%, very large asset, probably, you know, maybe larger than a company like CanCambria might have anticipated to pick up, right? We are pretty opportunistic to have this 1,000 or so square kilometer position, and we're in good company. We're rubbing shoulders with some big companies. The asset is really proven in terms of both gas in the ground and producibility. We just need to commercialize and bring on better fracs and dial into the recoveries. We're looking at around a 6 BCF well, which is very typical of a 40-acre drainage, and it's scalable. It's scalable, and the project generates significant free cash flow once we get to scale. And with that, I'll end the presentation, and thanks for your time.